Hey, what's going on, guys? Welcome to the Investing 365 YouTube channel. And in today's episode, we're going to be talking about Rocket Mortgage, a company that I think has a lot of potential. We're going to go into the price target, we're going to go into valuation, we're going to go into their numbers, their revenue, their product, and why I think, honestly, even if mortgage rates were to go up, right? Like if they didn't end up staying at all-time lows like they are now, how that would impact Rocket Mortgage, and in my opinion, might not impact a Rocket Mortgage, but we'll get into that a little bit later. But doing the research on these stocks does take a long time, so if you don't mind just smashing that like button. And without further ado, let's dive into Rocket Companies, or Rocket Mortgage, the company that's disrupting the mortgage and the housing industry all in one. All right, so first and foremost, let's look at Rocket, ticker symbol RKT. The overview of the company is that they're a Detroit-based holding company consisting of personal finance and consumer service brands. They provide industry-leading real estate, mortgage, and financial services, empowering consumers through entities including Rocket Homes, Rocket Auto, and Rocket Mortgage as well. They are the nation's largest mortgage lender. But let's talk about something that's really important, which is the key metrics that they have here on their website. This is quarter 3, quarter 4 will be updated soon, and I'm interested to see what quarter 1 of 2021 looks like, so we won't see that for quite a while. But currently, in quarter 3, they were able to pull in $213 billion in mortgage originations. They also have $11 billion in total net revenue. And so here's something that's really impressive to me that I saw on their homepage, is that they are 4.6 times the industry average of all companies in the refinance retention rate. So more people are coming back to them to refinance their homes or their investment properties by a landslide over the competition. So they also have 22,000 team members, but that just means that they're a big company. And here are some of the reasons why I'm investing and why they think that people should invest with them. So they are obviously accelerating market opportunity. They are at the center of the largest consumer asset class in the US, real estate, right? Then they have unparalleled digital first brand. The Rocket brand is synonymous with providing simple, fast, and trusted digital solutions for complex personal transactions. And what this means is, they have brand authority, right? Like when you think lending companies for mortgages or refinancing, you think Quicken Loans, you think Rocket companies or Rocket Mortgage, you think of them as soon as you think mortgage, right? Because they built a really good brand and a really good product as well. So next we have constant innovation. They are leveraging decades of technology investments and innovation to drive industry disruption and deliver an unmatched customer experience. This is super important. Any company that wants to be disruptive in any industry needs to have amazing technology. They want to simplify or modernize the process of doing business with them versus other lenders. And this is what they're doing. They're using technology to speed up and make the process very easy. And even if their rates are 0.1 or 0.2% higher than other lenders, because of the ease of use, that makes them a shark in the water. And because of that ease of use, they are killing it in the market. So last but really the biggest reason why I'm personally investing in them is they have multiple drivers of profitable growth. They tend to grow market share in their primary direct-to-consumer channel. They are also expanding their partner network constantly. Their client retention and recapture through servicing is incredible, and their enormous ecosystem of market opportunities. And we'll get into that just a little bit later in the video because I think that's really important. But next, I just wanted to look at the price of Rocket Mortgage companies over the last 6 months, and really just since August when they IPO'd on the public market. And it doesn't show on this chart, but they IPO'd at $18 per share. And as you can see, they kind of went up and up at the very beginning and hit 29 and even $31.31 here in September of 2020. And then they kind of just fell. People were worried that the mortgage lending rates were going to go up and the entry to buy a house was just going to get more expensive as interest rates go up. And that's why their price kind of stagnated. And because of this fear, and we're going to get into that as well, and because interest rates for homes is an important part of their business model, we'll get into that in just a few minutes. But if you look here, their current price is sitting at $20 per share. And that's already lower from that 31% by over 35%. So when I hear people say, oh, I want to buy a value company, right? I'm looking at companies that are innovative, that have a great business model, and we'll get into the revenue in a second because they also have great revenue, but as a final cherry on top, they're undervalued. And that is what we see here with Rocket companies so far. Now moving on into how Rocket Mortgage works, because I think this is really important for you guys to know. Super simple. You apply online, you get custom options, right? Expert custom recommendations with real interest rates and payments. So they give you an exact detailed transcript of what that's going to look like after you apply. Then you get approved or denied, of course, right? But they say get approved, get instant online approval. But they probably approve more people than other mortgage companies because they have the money to do so. Then you get to close your loan. Use your Rocket Mortgage to-do list to verify the details and get to closing fast. And last but not least is just manage your mortgage. This is where you make payments and all that just from their app. That's what makes them super, super nice, is that they just have payments that you can just go right through Quicken Loans. And so the whole process is streamlined through the application process all the way to the approval and even where you make payments. So that makes it a super incredible source for, a kind of one-stop shop for your mortgage or even refinance needs. So next on the list, I wanted to show you guys the companies that they own that you might have also been familiar with. Quicken Loans, here's their website. I'm not gonna go too far into it. I just want you guys to be aware that Quicken Loans is owned by them. And also Lendesk, if you haven't heard of them, Lendesk is one of their products that is extremely undervalued still. I think this has a ton of potential. I'm not gonna get too far into this either because I have a lot more that I wanna share with you guys. But Lendesk is an awesome platform and a great acquisition. It's important to look at the competition, and Quicken Loans top 8 competitors are New American Funding, Flagstar, Loan Depot, SunTrust, Caliber Home Loans, UWM, Fairway, and Guaranteed Rate. And honestly, just right out the bat, you can see that when you hear Quicken Loans, it reminds you, oh yeah, they do this, right? And all these other companies, besides maybe one or two, they don't have that brand recognition. That's what's really important, is to have a strong brand when it comes to getting new clients or even having retention of those clients. You want to just have that brand recognition. And when it comes to mortgages, that's what they have built. So really good to see that their competition isn't as heard of in, the mortgage space as they are. All right, so let's dive into their finances. This is the juicy part of Rocket Mortgage. And if you stayed this far, smash the like button. And again, don't forget to subscribe if you haven't already. So we can go to 2018 or 2017, but honestly, because this company has been on a growth cycle, right? They've been acquiring brands. We want to look at 2019. Honestly, I wish I had the data for 2020. It's coming out. We can look at the quarterly, 2020 Q1, 2020 Q2, 2020 Q3. They all look super good. So rest assured, 2020 looks like a great year for them, even with the acquisitions that they did have. But 2019, their revenue has shot up 21%. Their net income shot up 45%. Net profit margin. And again, this company is still growing, right? They still have new brands, right? They just bought Lendesk. They have massive upside potential because they're the leader in the space. They also have the brand recognition, and their revenue and their net income looks super good as well. So seeing that in an industry leader like this, while they're also the most innovative company in the mortgage space, this makes Rocket Mortgage look like the shark in the water that's really hard to beat, especially if they continue to innovate while they're still growing. So next, I want to show you guys how risky is Rocket stock. So first and foremost, as you probably know, that if interest rates go down, mortgage companies tend to do well, right? And that's what has been shown in the last previous slide, is that the Rocket mortgage revenue has shot up from 2017, 2018, and now 2019 into 2020, and probably into 2021. It's going to keep shooting up because of the fact that interest rates are going down. But the beautiful thing is, Rocket Mortgage isn't influenced by that, and we'll get to that in just a moment. But the biggest risk for mortgage originators typically is credit risk. This isn't really applicable for Rocket, since Rocket Mortgage is a non-bank mortgage originator that generally sells the loans it makes in the secondary market. This means that if the loan doesn't perform, the buyer bears that risk and not Rocket Mortgage. So they don't lose money, right? That's a good sign. You also have to remember that Rocket's production involves government guaranteed loans, so credit risk is already limited to begin with. So you're probably wondering, why is the stock price went down? Well, there was a big fear that because interest rates were so low for all of 2020 and even 2019, but realistically, we're talking about now. So at the end of 2020, people were starting to get worried that interest rates went down and now they're gonna go up, and it's gonna hurt any mortgage company. So that's why people aren't really buying up a lot of mortgage company shares, right? So Wall Street is thinking that the biggest risk for Rocket is an abrupt increase in interest rates, which would choke off the current refinancing wave. This would mean that earnings could decrease, right? Mortgage originators are in a highly cyclical business, which explains why earnings multiples are so low right now. But Rocket's business model gives the company an advantage over most mortgage originators in that it doesn't require an army of loan officers to generate sales volume, as the Rocket Mortgage app takes care of much of that. Loan officer commissions are far and away the biggest expense for originators, and that gives Rocket the ability to outperform almost every other retail originator. And if you're not familiar with mortgage rates, I just wanted to give you a little quick chart. Here is the 30-year mortgage rate. And as you can tell, it's been down and down and down to all-time lows of 2.72%. This is, of course, as of December 3rd of 2020. So if you're looking at this in January, February, March, April, May, this has also might have maybe changed. So don't look at that as like the guidance of, how good Rocket Mortgage is going to do or not, because like I said, they also have a little product that allows them to perform during times of interest rates that go up. And we're going to get into that right now. So Rocket Mortgage actually holds one of the only assets in the mortgage space that does really, really well when mortgage rates rise. So you might be wondering, what is that asset? That asset is servicing. So servicing is the right to perform duties on behalf of the lender. Servicers collect payments, send out the bills, ensure taxes and insurances are paid, and handle delinquencies. As compensation, the servicer earns an annual fee of 0.25%. The right to perform that service is definitely worth something, and it's valued as a function of interest. The right to perform that service is definitely worth something. So when interest rates rise, people hang on to their great rates, and the servicer will get the cash flow for a lot longer. So Rocket Mortgage has positioned them not only to make money while the interest rates are low, but also to make money when interest rates go up. And that's what you want to see from a company that knows that they're in a cyclical business. Because if you know that you're in a cyclical business and you can attack from both sides when things go in full circle, right? Then you can make money on both sides of the business. And that's what they're doing here. And that's why I'm super, super bullish on this stock. So as far as valuation goes, Rocket trades at just over 5 times where it expects its adjusted earnings for 2020 to end up. But most of these watching the stock expect earnings to get cut in half in 2021. That sounds alarming, right? But you gotta remember that the Fed is also buying mortgage-backed securities to support the economy. These purchases push mortgage rates down as more borrowers refinance, their monthly payments fall, and those savings will get recycled back into the economy, which is the rationale for the Fed's policy. So pretty much rates will stay here where they're at right now, 2.72% as I'm making this video, as long as the Fed wants them here. What happens to short-term rates over the next 5 years is anyone's guess, and the refi boom could probably be over, but this just means that Rocket's business model will rely more heavily on servicing and building the purchase business. And who's gonna really suffer out of all this? Well, during a time like that, typically smaller lenders are going to suffer versus a company like Rocket Mortgage. And also, as I mentioned before, Rocket Mortgage has servicing. So any company that doesn't have servicing as an additional product could suffer big losses during mortgage rate spikes. And so as many smaller originators will probably struggle to compete, this means that we will probably see a wave of mergers and acquisition activity. Rocket will most likely be an acquirer because they will, have more cash flow. In the meantime, by some estimates, 75% of the US mortgage market can cut its rate by at least 3/4 of a percentage point, which means that the near-term opportunity is one for the ages. While the party, meaning the mortgage rate decline, will eventually have to end, it may last longer than the investment community thinks. And this is why Rocket Mortgage is not just the Motley Fool's pick, but also my big winners as far as the next 2, 3, 4, 5 years. And honestly, with their financial, their innovation, their brand, all that put together, I could see in the next 6 months to a year, their price to go from $20 that we saw today to a nice comfortable $40 per share. And then as long as interest rates go down or at least level off, I'm not talking about spiking because obviously they're not going to make as much money as they are right now. They're still going to be okay, right? They're not going to go out of business because they have servicing and the fact that they're the biggest brand out there for mortgage origination and refis in general. But the biggest thing to take away is that if mortgage rates were to go down or even level off for the next 2, 3, 4, 5, 6 years, right? And really just paying attention to what the Fed says and does will determine exactly what mortgage rates do. So you can actually just be paying attention to this while you're buying up this stock if you are looking at it as an investment. Again, this is not investment advice, but this is just my opinions. So in the next 2, 3, 5 years, depending on how much they can innovate, if how many acquisitions they're going to be able to make, if those are strategic acquisitions or not. So far they've been really, really good, and also the revenue that they can bring in, all those factors are going to play a hand in how they get to this price prediction. But I think in the next 2, 3 years they could easily hit a price target of $100 per share, in my opinion. And this would equate to a 5x multiple from where they are now, and also equate a 3x multiple from where their all-time highs lie, which was really early to their IPO. And when we consider their market cap of $40 billion, the 5x multiple would only put them at a $200 billion valuation. And I think in the long term, we're talking like 10, 20, 30 years, maybe in the next cycle of mortgage rates going up and then also down, we could see this valuation get a lot higher if they're able to acquire the right companies, the strategic partnerships that they have been working with already. If they can acquire any of those during the next, boom and bust cycle, they might do really well in the next 10, 20 years. And I could easily see this company growing into the $500 or even $700 billion valuation, and maybe even at some point $1 trillion valuation. Now that's a really bold claim, I get it, because that would put their stock price at a $500 US valuation. That's very high from today's levels. But that's what a 1 trillion market cap would look like, right? And honestly, at the rate that people are buying homes, refinancing, and even building homes and then selling them, all this plays into the economy of what mortgage companies do, and more specifically, Rocket Mortgage. So hopefully you guys enjoyed this full in-depth analysis video. If you did, go smash the like button and subscribe. Also, if you're interested in seeing more videos like this, let me know down in the comment section below of a company that maybe you want to see an analysis on. I'm more than happy to do it. And if you haven't already, go down in the description below, go sign up for the Discord, check out any of the free money links that I have down in the description below as well. And hopefully you guys got a lot of value from this video. And if you did, go share it with a friend. And without further ado, I'll see you guys in the next episode. Peace out. Feel free to check out the links down in the description below where you can get a free stock from Robinhood, $20 free from Stash, 2 or more stocks free from Webull, or $10 free from M1 Finance.